Good morning, traders. Thanks for joining me today. It's 8:01 a.m. Chicago time on Friday, the 22nd of August, 2025, the last Friday of August, I think. No, it isn't. There's one more, the 29th. I want to remind you that derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Lots going on today. Let's jump in and look at what's on deck. Quite a bit of movement, big dip and return in the S&Ps overnight. Also the Nasdaq, very quick spike down right before the European Open. Overall, the market posture is mixed, as you can see. We really haven't moved that much from our prior settlement. 12 points in the S&Ps or 19 basis points, 23.5 points, which is less than one rotation in the Nasdaq. The Russell is doing pretty well, up 44 basis points, 10 points. And again, the Dow, which I tweeted about, doesn't sound like anybody's on Twitter anymore. I tweeted about yesterday saying that the Dow's consistently shown higher volume, relative volume over the last couple weeks. And I asked if anybody's trading it and why it's doing that. If you know why the Dow is getting a lot of attention, I'd be very interested in knowing. There's something there that I'm not aware of. So that's what we have. Mixed posture overall. We're seeing gold dropping a little bit, silver as well. Pretty much everything is sitting steady. The themes today. German GDP was lower, showed a contraction. Canadian retail sales in line. Wall Street Journal's Timmy Rouse, very tough name to say, says the Powell plans a U-turn on the economic strategy that's soured, meaning holding on to higher interest rates, higher for longer. Wall Street Journal article noted the divisions growing inside of Fed ahead of September cut decision as Fed's hammock opposes cuts due to rising inflation, while Fed's Collins signals openness amid labor market concerns. Fed's Goolsbee said September is a live meeting and Fed has been getting mixed messages on the economy. That's what's really important for today. Today we have Jackson Hole Symposium, started yesterday, goes through tomorrow. This is kind of a big opportunity for Jay Powell to make a splash and to actually tip his hand on whether or not he continues to hold steady or have a hawkish undertone about interest rates, or if he's bending to political pressures. So we're looking at Fed's Powell's speech at 10 Eastern. NVIDIA ordered a halt on the H20 chip production after China's directive against purchases. What do we have today? We had a bunch of numbers. We covered that. And then today we have Fed's Collins speaking at 9. That's the one that's looking for more openness to reducing rates. Fed's Powell at 10. Fed's Hammock at 11:30. President Trump is set to make an announcement. It's a mystery. Not sure what that is. He's also set to walk the streets or to patrol the streets of D.C. But there's some big announcement that's occurring right after Fed's Powell. So the market's wondering, is this related to interest rates or what? And so we're looking out for that. That's probably, Fed's Powell's text and speech is likely to introduce volatility. Whatever Trump is doing is likely to introduce volatility, and that'll wrap up the week for this week. So looking at the S&P multi-distribution profile, again, we had some pretty active price discovery overnight. We dipped down. We'll look at that in a minute. 115,000 contracts, which is light. If you look at the R-vol on here, Let's freeze this. If you look at the RVOL, you will notice that it is low, right? 79% of 79%. Today's volume at this time, at this exact time, around 8 a.m. Chicago time, represents 79% of the average of the last 20 sessions. It's a relatively light. Same in the NASDAQ, the Russell, the Dow, the DAX, the Euro stocks, and across the board. You can see down the line, it's not all that great in terms of volume. We do have a pretty good relative range. And then we have these events that are likely to kick in. A quick reminder about the Accelerator program, which starts September 16th. That goes over everything we talk about in terms of approaching the market options, soup to nuts, relating to how one can set themselves up to trade professionally. It's a 5-week program, including live trading on the last week, coaching sessions, workshops, going through the fundamentals. And the goal is to set you up with something that you can own, that you can build for yourself. And then those in the program have 6 months of follow-ups, tune-ups, all that stuff, chat room, all that stuff. That program kicks in September 16th. You can scan the QR code there to get more information. Let's take a look at the markets overall. Hopefully the image here is big enough for you to see. Change the screen around a little bit. Okay, so what do we have here? This is the NASDAQ. Let's look at the S&P to start to follow our routine. If you recall, I put this area in on Wednesday's video. And I talked about how this area for this day, the sell-off day, is going to be a key over-under zone. At the time that I drew that, the market was above, and the expectation was the participants would likely bring prices down into that zone and likely repair some of this weak structure that we formed. This weak structure is actually part of a weak structure on the rally. Then we did put in weak structure on the sell-off. We ran right through. We didn't actually auction and form proper balance and transition balance through, so it wasn't properly checked. So the idea was we're likely to just open on this day, dip, and rally back in, and we would likely push to the other side, which is around 64.54-ish. That was the primary scenario on Wednesday. That was totally wrong. The market instead opened, tested very lightly to the upside, our key 64.30 level, and then it dropped pretty dramatically and then ultimately pushed back to 64.30 on the close. Since then, we've retested this level. So we've tested this level, this zone that day. We've retested from below during yesterday's overnight session, and then yesterday really was kind of an oddball trade. We opened, we dipped down, we pushed up, we dipped down, we came back in. Very tough. If you're finding that the market's hard to read, you are not alone. And then since then, let's zoom in a little bit. Is this clear enough for you all to see? Hang on, why can't I clear? Since then, what we've done is we opened in range. This is balance from the prior day. This is the balance of the day before. So you could see that we're putting a point of control kind of in a tight zone, and we formed this big MCV-POC, and we opened right on top of it, consolidated, and then we waited for the European Open, and we took this very sharp dip down, and we rallied since. What would have been nice to see, what would have been nice to see and would have created a new LIS or line in the sand is we would have been nice to see this excess low retested and holding. The fact that it created a V bottom and it shot up, not the best structure. Clearly, there was an excess down here. You could see there was no volume, but the problem is that this occurred overnight where volume is thin anyway. So, beautiful, a beautiful test and rejection into our stock zone there. You can see there's a nice gray band that's called the stock zone. We could not test the low, so there was not a liquidity check on the low. If we're going to come back from an auction perspective, if we're going to come all the way back to a prior low, we would expect to do at least a lick check. Meaning, what is a lick check? A lick check is we go down to a level, fight that level as people expect support there, break through, flush some of the weaker longs, test to see if there's any further interest of selling. If there's no further interest of selling, then it's a high probability buy and it shoots back up. And barring that, what we would like to see is something that looks like this, like we had, and then we would want to see it come down, dip, and clearly show us that the sellers are not in control and are not interested. This is what we would want to see, and that gives us a pretty strong bullish tilt to play against. And we saw that. You could see this here, pushes up, comes back. You could see that, in fact, it kind of did it twice right here, very short term on a trigger chart that would show up more clearly. But on a longer time frame, you could see that it retested, and that forms a very solid or strong basis to get long. I could comfortably get long in that scenario. In here, yesterday, it did the same. Dip down, pull up, pull back, and now, unfortunately, it occurred at the end of the day. Now we can have a more confident long. The dip and run, a V bottom, or a tweezer top, which looks the opposite like this, very tough to lean against that. It's not really showing two-sided play on how this might play out. So what we have now is this consolidation against a weak high, point of control at the top of the range. And again, the point of control continues to persist in kind of a tight zone. And what this is likely to do is give us, there's incentive here for both sides to be active, for both sides to push. I want to, I have enough of incentive, or I'm not threatened to take a short, I'm not threatened to take a long. And so what that's likely to result in is chop, is for it to chop around. So given that we're opening inside of the prior day's range, we're looking for the prior settled stat, in here, and I'm looking for this thing to dip down. So what's the scenario? Let's change our colors. Here we go, the green being the primary scenario. We're looking for a small dip. The overnight inventory for the S&P is only about 45% long, so there's not much of a dip expected. And I'm looking for it to push higher, retest the prior day's high, consolidate, and then we have Powell, who comes in, just a half hour after the open, and who knows where we go from there. I have to draw this dashed line. I have no idea, but at some point I'm looking for a test of the MC point of control and prior settle. Statistically speaking, historical probabilities support overwhelmingly this kind of a test. So in that sense, I'm looking for it to dip down, consolidate down here, and then start to test that spike low, assuming Powell holds on to the bearish or steady rhetoric rather than turning bullish. If Powell turns bullish, it's a different ball game, and that gives us scenario 2. What is scenario 2? So I'm unattached. As a trader, I'm unattached to whatever the market does. I don't really care. Almost like a spread trader. You know, a spread trader trades a correlated product, long and short. They don't really care what the prices are doing or what the trend is. They just care about, is the spread closing or is it opening? You know, if I'm long the spread, then I want it to open up. If I'm short the spread, I want it to close. And I'm kind of coming at it from that attitude, like just give me something, give me volatility. That's all I care about. The secondary scenario is it opens, responds, gets right back into balance. The MCV POC consolidates down here, and then we get the Fed news, and the Fed news is bullish. The bullish target is right up here. It'll be 64.50 to 60. That brings us back through the poor range and brings us back into the edge of where the poor structure is. Okay, those are the two scenarios. Let's move on. We don't have that much time. Let's look at crude. Crude, I drew this in last week. This, hang on. This zone that you see there, I drew this in last week. This is based on the same concept that we have a strong test down that gets bought up, market takes a dip, it checks, and then I put this range in and this becomes the LIS, and you can see that it has tested and retested this LIS again and again and again. And on the break of this zone right here, we have a magnet, the key magnet stock zone. On the break of this zone, then the next area to test would be this area up here that I highlighted in red for resistance. This is the top of balance. You could see if you're a Convergent member, you'll have this in your cloud levels. The top of balance, MCLVN top of balance, and it managed to achieve that overnight, and it managed to stall. So we're respecting day levels here in crude. I found crude lately to be a tough trade, pretty good structure, but overall just a little bit tougher to read. A little bit tougher to read. A lot of overlapping 30-minute bars is tending to break one-time framing and then continue. So overall, the market's just very choppy. You can see crude has tested this area up here and is struggling. As long as crude stays below this area, I'm looking for a return to where? To the magnet. I know that's a gutsy thing to say, given that we're in rally mode in crude, but I'm playing what the market is showing. I mean, if it breaks through our top of balance and our key resistance zone here that I'm looking for to just push through, pull back to top of balance, and then run towards the 64, 65 areas, the next stock zone up to test. But until it does that, you know, until it gets into the 64 handle, I'm expecting that the buyers will likely fizzle out and it would come back into the balance range below that you see here. Again, the magnets right down here, the MCV POC, you can see for this zone is right down here. So I'm expecting it to struggle, test, retest, you know, lower high, fail, and then whatever pullback we get against DGPs. DGPs stands for day generated prices. That would be IB low, OS low, the open, full session VWAP, full session mid, RTH VWAP, RTH mid, whatever area we can lean against, looking for the short. And if it dips through the 63.20, then it's got, you could see there's a gap in these stock zones. It's got a nice little run into the MCV POC and crude. Hard to tell what's scenario one and what's scenario two here. We'll have to wait and see. Okay, that's what I have for you. Let me ask you something. Why are you here? Is this hitting the mark for you? I love doing this. It doesn't feel like I'm wasting my time. I've always had a a group of prop traders or group of traders around me, and I really love to talk about the markets. Is this useful to you? Would you make adjustments to this? I would love to have more time because I'd like to spend more time looking at what has happened before. How did we execute against what we said our scenarios are, and then get into what we think the scenarios will be. But that's going to be like um, an hour and a half of me babbling along. Would love for this to be a two-way discourse. Let me know if this is something that isn't doing anything for you, or if it's something that's useful. This helps motivate me to keep it going. If not, if folks don't find it very useful, then I'll find another venue to talk trading. Anyway, I'll catch you all on Monday. We'll have another. Monday, yeah, I'll be traveling next week, but I'll be here Monday. I'll be doing Trader Bites. I'll be doing them remotely. I'll catch you on Monday, and if you're at Convergent, I'll catch you in the Discord chat. Again, if you're interested in learning about the details of how this works, this auction process works, a very robust way to trade, scan the QR code or go to that link to learn about the accelerator program. I'm doing an AMA next Wednesday to answer any questions, allay any doubts or whatever about how this approach works. Thousands of people have done this approach. In fact, many have education programs based on this approach that I brought online in 2005. 20 years, can you believe it? And it's still the same. It hasn't changed. I'll talk to you soon. Take care. Have a great weekend.